Hi guys, Piotr here. This is LiteFinance Global YouTube channel and it's my pleasure to be with you again. This time, as you can see, the guy with yellow t-shirt, it's me. Warm greetings from Dubai, beautiful Dubai. Alright, without the further delay, let's jump straight and start our show today. Alright guys, what we are going to talk about today is a 1, 2, 3 formation update, and I'm going to tell you about my twist. It's not gonna exactly looks like it's 1, 2, 3 formation. I'm going to be a little bit front runner, right? Overall, I'm sorry, 1, 2, 3 pattern is a breakdown trading with the attempt to catch quite good waves, especially with the broken of the important support. All right, so before we are going to discuss that based on the chart, let me show you what is my way of the approach, what I wanna see with the usual approach to the 1, 2, 3 pattern, and then I'm going to tell you about a little bit of the trick from my side. So overall, right, when it comes to the attempt to sell the break, we have the rally, market is rising, right? And what I wanna see with the rising market and with the sudden pullback, all right, I wanna see that we are taking out the latest demand zone. We are taking out the latest demand zone here, right? And then we've got the first strong move to the downside, and that could potentially be 1, 2, and it's gonna be very important how big pullback we are going to see after this initial move to the downside, right? If we are going to see at least 50% or more, all right, 50% or more pullback, the rally over here, 50% or more, then the level here, the point number 2 is our breakout level where we are going to try to sell, and the top of that pullback is gonna be the level where we are looking to place our stop plus 1 pip, let's say. All right, and then of course we are looking for the strong move to the downside, and number 2 is our sell level, sell the break, all right, and here is our stop, right? Now, while I was looking from my side to add the possibility to have some advantage, or trying to get the advantage, of course, always something is for something, right? I'm front running. I'm going to explain to you in a moment that I'm going to front run. But this 1, 2, 3 pattern was great before the big financial crisis in 2008. All right, it was the great approach. Any kind of the breakout trading, breakdown trading was great, right? And as I'm trading mostly FX, so once we've seen the huge money printing by the central banks, the volatility when it comes to the majors went down. So, well, I would say very often we have some fakes when it comes to the breaks, just the stop count and looking for liquidity. Now, What I like also is to, when I'm risking then 1 unit, I wanna try to get 3 units, right? So with this approach, you have here, let me change the color. With this approach, we have this type of the risk, that's the size of the risk, right? So we are looking for 3 of them to the downside, right? 1, 2, and 3. So that's our final target eventually, right? So quite long distance in that case. Of course, it's gonna be opposite is going to be true when you are looking to buy. So let me quickly show you. Market is going to the downside, right? And once we've seen the rally, I wanna see the rally above the latest place from where we've seen the weakness, all right? So that could be 1, 2. Then I wanna see the pullback correction 50% or bigger, right? So in that case, that's where I'm interested, right? That's where I'm interested. So in that case, if that's the true, right? Number 2 is going to breakout level, is going to be the breakout level, and here the number 3 is going to be where is our stop is going to be, and +1, right? And if we are talking about the basic 1, 2, 3 formation, here is a buy, stop buy, right? And here is a stop where we are going to defend our money, all right? So that's the basic stuff, basic approach to 1, 2, 3. Quickly, let me show you what we have. For example, just not to look too much, there was a little bit of the rally over here, right? We've seen, maybe it's not the greatest example, right? But guys, do your own homework, do your own research, and well, you are going to find out. Anyway, why this rally was interested from my perspective, because that was the latest weakness here. So that was the new wave of the approach. Of course, overall, because you have to filter, you cannot trade each and every setup, all right? Like when you have approach to different strategies, the same. If you are going to trade each and every setup, then in the long run, you are not going to earn the money. So I was looking for a bigger picture. We were moving down. I was looking for some kind of the attempt to rally that we took out at least one of the supply levels. That's what happened here, right? That's what happened here, okay, rally. And then it was the boom to the downside, right? So we went through the latest demand, okay, all right? And the rally was bigger than 50%, okay? So with this standard approach we were discussing, all right? So that was the number 1, that was the number 2, okay? And if we are going to break through that level, we are selling, all right? And our stop is going to be above point number 3, and that was the point number 3, the highest overall, right? And in that case, that was the distance, and as you can see, it was the great move to the downside. The only thing is that I'm afraid it was not fully 3-to-1, right? It was not fully 3-to-1, okay? Now, my approach is a little bit different. It's not clearly breakout trading. As I've mentioned, I'm front running in that case. All right, so if that's market is rising, right, taking out new high and then suddenly pulling back, right? So okay, the latest demand, latest support been taken out. Okay, again, I wanna see higher pullback, but what I wanna see when I'm going to front run, point number 1, I would say it works very good for day traders, all right? And if going very, very well, if the overall direction of the market is in your favor. So I'm selling, all right, not because of the one breakdown. I'm selling because the bigger picture of that market look like this, all right? So overall, I'm looking for a rally for 78, 88 fib, right? Where I'm selling, so 78, 88 might be somewhere here. That's where I'm selling. My stop is +1, +3 above the high, all right? The usual sells 1, 2, 3 pattern is going to be here, right? Because it's 1, 2, 3. So if the market went high enough, 78, 88 Fibonacci, and pulling back, when we are approaching point number 2, all right, I'm partially taking profit. I've got the time to react in case of the false break and reaction to the upside. Why? Because if I'm going to take the profit over here, all right, usually already for me it's going to be 1 unit risk, 3 units profit. Already I'm gonna be good to go further. And if this 1, 2, 3 full pattern is going to work out, well, guys, count yourself. So hopefully this trick is going to be useful addition into your trading arsenal. With that being said, please like, subscribe, leave the comments below. Guys, it was my pleasure. Do your homework, do your own research. See you around. Wish you great next trading day. Take care and goodbye.